How to become an intelligent trader and investor. It is tempting to treat trading and investing as two separate endeavors, with each endeavor having its own set of rules, principles, and objectives. But in this video, we will put trading and investing under the same proverbial umbrella. And that umbrella is financial speculation. So, what is financial speculation? Well, basically, financial speculation is the study of taking on short term bad stuff for long term good stuff. Usually, the bad stuff is either guaranteed or very likely, and the good stuff is uncertain. So, let us review our definitions so far. Financial trading and investing are both forms of financial speculation, and financial speculation is the study of guaranteed short term bad stuff for uncertain long term good stuff. So, for us traders and investors, what is the good stuff? Well, the answer is simple. The good stuff is a financial profit. And what is the bad stuff? Well, the answer is simple again, a financial loss. Therefore, as traders and investors, we must make sure that our financial losses are short term and our financial profits are long term. But as traders and investors, how can we make our good stuff even better? Well, we can work to ensure that our financial profits are a lot larger than our financial losses. And we could do this by allocating more capital to our financial profits and diverting capital away from our financial losses. We can also work to ensure that our financial profits are more likely, i.e., we can increase the probability of securing a financial profit. Now, granted, this is difficult, but it is possible for the use of three things. Number one, economic indicators, especially leading indicators and indicators that are used by central banks in relation to economic growth and inflation. Number two, participant analysis, i.e., a study of the sentiment of large market players. And the best example of this is the commitment of traders report. And number three, market analysis. For example, if you have a very bearish view concerning stocks, but the market is in a strong bullish trend, then under those circumstances, it probably would not be a good idea to speculate. As financial traders and investors, we must deal with and quite honestly eradicate the concept of value. It is not our job to assign a numerical value to a security. That's the job of the market. Our job as traders and investors is to profit from the fact that the very concept of value is non-static and ever-changing. And these changes represent money-making opportunities for us. What else does it mean to be an intelligent trader and investor? Well, we've got to be independent thinkers. We've got to do our own homework, we've got to draw our own conclusions, and we've got to stick to our conclusions. Furthermore, we've got to learn how to monetize our opinions. And based on what we've already discussed in this video, we've got to learn how to divert cash to our opinions that happen to be right, and to divert cash away from our opinions that happen to be wrong. But above all else, we must not get into the game of fighting the markets. If the markets tell us that we are wrong, we accept it, we close our position, and we move on. To be an intelligent trader and an investor, we've got to learn a little bit of basic economics, but only to the extent of developing an intuitive understanding of how demand and supply affect price. But there is one concept of economics that we've just got to get out of our heads, and that is the efficient market hypothesis. All financial speculators, whether they know it or not, reject the efficient market hypothesis. Personally, I reject the efficient market hypothesis too, but for two reasons. Number one, it is impossible to test. And number two, it runs contrary to human nature. So if we traders and investors, if we reject the efficient market hypothesis, then in effect, we are saying that it takes time for market participants to process relevant information. And this provides profitable opportunities for us. I hope this short video has enhanced your understanding of what it means to be an intelligent trader or investor. But before I conclude matters, I would just like to point out that all good financial speculators keep in mind that markets exist to do one of three things. Number one, enable central banks to implement policies with regards to monetary economics. Number two, allow large participants, whether they be leveraged or unleveraged, to carry out commercial transactions. And number three, help institutions to carry out hedging activities, i.e. to isolate or reduce a particular risk from their business activities. If you have any questions, please feel free to send me an email, or please feel free to leave a comment down below. I will try my best to reply to your comments as quickly as possible. Thank you for your time, and happy trading.